Ada Army, Keith at Crypto Bullseye. Let me know in the comments how you're all feeling this morning, because 82 cents, the one we talked about in the last video, that was the end of the pattern. That was the rejection point, and that's exactly where price is rejected for the past week. So what do we need to happen to break through that 82 cent level, and whose turn is it, the bulls or the bears? Okay, so we've got Cardano trading at 76 cents. We said 82 cents was going to be the rejection point. That's exactly what happened. Once, twice, 3, 4, 5, 6, 7, 8, 9. 9 days underneath 82 cents and above 76 cents. So we're creating this range here, and look what happens when you look at the indicators. Indicators on the daily chart are showing being overbought for this whole period here. So that's indicating that we need some kind of a pullback. And this is the daily chart, guys. So we're going to delve into the higher time frame, and I'm going to show you a bit of hopium on Cardano. So the daily stochastic needs to pull back. When the daily stochastic pulls back, how far can price action pull back? Then that's showing that the bulls have got another turn, and then we can try and take out this 82 cent level again. Once we take out the 82 cent level, we turn bullish in this channel, top half of the channel. You'd expect the RSI to break its 50 level, turning bullish. Then you can start regaining levels. We can't regain levels until we've took the 82 cent level. So in the short term, what I'm saying, watch the stochastic pullback, see how far price action pulls back. Make sure that we put in the higher low, guys. That's the key to this video. That's the key to this pattern. We put in a higher low when the stochastic comes back. And when the stochastic goes back up again and the bulls have another turn, we can try and crack 82 cents, come back into the top of this channel. When we revisit the top of the channel, I'll be more bullish, guys, because this is showing that we would be bullish. So that's what needs to happen in the short term, guys. That's going to be a few days to play out for this to pull back. It's going to be a few days. It's highly unlikely that whilst the stochastic's overbought here, that we're just going to get a crack straight through and then a pullback and a retest. It's not impossible, guys, but it's highly unlikely. We're overbought at the moment, so there's not enough conviction, there's not enough strength to push through that 82 cent level. Unless we have some kind of a driving catalyst, but we're not planning for that. We're not preparing for that because we don't know whether that's going to happen. So 3-day chart, that was the 1-day chart. The 3-day chart is looking a little bit healthier, guys. So each one of these trading candles is 3 days of price action. So you can see we've come from oversold and we're starting to come back into the mid-range, guys, when we're starting to push back up towards the overbought level. So the 3 days looking a lot more healthy than the 1 day. So what does that mean? If you go back to the 1 day, guys, if you go back to the 1 day, by the time that this is played out, that could take 3 days, and then you go back into the 3 day, and it looks something like this. Then the indicator would be reset on the daily. Then the indicator would be reset on the 3 day. Then you go into the weekly. What's happened, guys? Oversold. So in the higher time frame, we're oversold. But as far as the next few days are concerned, that's what you need to be looking out for. We need to put in this higher low. That's the aim of the game, guys. So what we're going to do is we're going to look to see if ADA is starting to outperform Bitcoin yet, and what needs to happen on the ADA Bitcoin chart, because these are all relevant, guys, because the rotation from Bitcoin into altcoins hasn't happened yet. Bitcoin has absolutely smashed it. So no one's got conviction to sell their Bitcoin. No one's got conviction to put that Bitcoin into altcoins, try and get those higher gains, because the market hasn't given any kind of direction yet. So this is the ADA Bitcoin chart. Pull that up, zoom that out, and you can see as ADA starts outperforming Bitcoin, you get a big push to the upside here. Look at this, guys. Look at the date. January 2021. When was January 2021? That was the bull run. That's when ADA started outperforming Bitcoin. All the way down to here. And then what's this? This is the bear market, guys. So this is the bear market. And guess what? ADA has been bleeding against Bitcoin for all of that time since September 2021. So we've got signs now. We've got signs that we've put in, some highs. We've got signs that we're showing that there's a bit of volatility. There's a bit of liquidity coming into this. And we can see signs that Bitcoin is starting to lose traction against ADA. You can see here, just stick a fib on, holding the 786. But what's happening? We're putting in higher lows. If we bring up the indicators, you can see exactly the same thing. This needs to pull back. This is the daily again. This needs to pull back. If we come back, double bottom at the 786, we can stick a trend line in there. Wait for a crack of trend. Once we've got crack of trend, there's a high probability that ADA is going to really start outperforming Bitcoin. We need to take out this previous high here, sat at 0.0000130 or 1380 Satoshis. So that's the aim of the game in the short term. That's when ADAs really start going to outperform Bitcoin. It's when we take out this previous higher high. So the next thing we can look at is the USDT dominance. The USDT dominance is something that we've been tracking. Why is it important? We want a weak dollar. What is USDT dominance? It's the dominance of US dollar tether stablecoin within the whole of the crypto market. You can see signs. We've put in a top. We've got a big rejection candle. We've come back up. We haven't managed to double top yet, but this is weak, guys. This is really weak. We're getting rejected at this point here, and that's 38.2% retracement of just this previous swing high. So with a 38.2% retracement and a rejection at the 38.2, that signals one thing, guys, a strong trend. But this is a strong downwards trend. And this is exactly what we want. We want a downwards trend for the dollar, i.e. a weak dollar. And the same for the Dixie as well, guys. This has got even further wiggle room. Look how far this thing's got down to come down, all the way down to 100. It's currently sat at 106. It's previously rejected at 110. We're starting to form a trend line now. Put it in, lower low, lower close candles, where the one red candlestick has taken out the previous extreme low of the previous candlestick, showing this is where the bears have got conviction. This is exactly what we want. We want this weak dollar to continue to the downside, because what that happens is it creates a surge of liquidity into altcoins, speculative assets, traditional markets. It creates a surge in liquidity because when the dollar's weak, the world is strong. Then the total three, guys, total three, not much changed on the total three. Everybody knows that once we get a break and close of all-time high, that's when I'm starting to scale out. How far have we got until the break and close of all-time high from where price action is now? That is 30% to the upside. That is 273.36 billion into the crypto market outside of Ethereum and outside of Bitcoin. And then we've got the big daddy, of course. It's always important that we look at the big daddy because Bitcoin's a market leader. So the one thing that's concerning me on this Bitcoin chart is this. This is a diamond pattern, guys. Diamond patterns are top-in patterns. So when do we really need to start getting worried on this Bitcoin chart? If we break to the downside, guys, this could get nasty. If this breaks to the downside here, breaking the diamond top to the downside, there's a strong probability that you're going to come back down and have a move to the downside, or a volatile move to the downside. Where would price action come back down to? This next resistance, which flips support, $75,000. Doesn't mean it's going to happen, guys. It means that we've got a diamond top on there. It means we monitor it. On the flip side, if we break the top to the upside, that's going to show strength. If we take out this previous high, that's going to show even more strength, because we put in a higher high, you'd expect to come back down, put in a higher low. So Bitcoin, guys, as far as the altcoins are concerned, Bitcoin's had its run, Bitcoin's had its gains. Bitcoin probably will run during alt season, guys, but it's going to run a lot less than what the altcoins are. The altcoins are the ones that need to catch up. Bitcoin's already made people millions. So what am I reading at the moment, guys? I thought I'd bring you a couple of books to your attention. I am reading at the moment William F. Eng, which is Trading Rules, Strategies for Success. So going through this book at the moment, guys, step by step. I urge you, self-develop yourself. Go and buy yourself some books, guys. Help yourself with risk management. Help yourself with self-development. And it's all well and good having a 9 to 5 grind, going to work every single day, coming home every single day. What is it when you come home at 5 o'clock, for instance? What is it that you do? Do you watch TV? Do you wind down? Because what I urge you to do, and this is something that I did 4 years ago, guys, and I wish I'd done it a lot earlier, is I spent my free time self-developing myself, educating myself. It could be audiobooks, it could be books, whatever it is, guys. Use that time to self-develop yourself, and then opportunities will come. Because what I'm trying to do is create passive income streams, not just within crypto, within the whole of the world, guys. I want a diversified portfolio of commodities, stocks, bonds, crypto, all sorts of different things, guys, because I need to be diversified, and I need to be diversified across the world, not just in one country. I'm from the UK. I don't want to be diversified just in the UK, because what if a different world economy starts pumping as the UK economy starts stagnating? I want my eggs in different baskets across the world, across different narratives, across different niches. So that's what I'm planning on doing, guys. So I'm going to continue with the self-development. Look at this for a book. Look at this for a book. This is just half of it. That's just half of it. There's another half. So I'm halfway through part 1 on that one as well. That's going to take me some time to read, but that's Trading Patterns. It's really interesting, actually. Encyclopedia of Trading Patterns by Thomas BULLSEYE. the widely trading series. So that's going to take me a while to get through, guys, but I'll keep you posted. If I see anything interested in there, I'll keep you posted, because there's certain things and certain trading patterns where you can get high probability moves, i.e. inverse head and shoulders, i.e. head and shoulders. There's certain different types of patterns that you get a higher probability of success once they play out. So I'm going to be focused on doing more of those. I'm going to start learning advanced patterns. I'm going to start self-develop myself as far as my trading is concerned, because there's certain things that I know and there's certain things that I've latched onto, guys. And the one reason why I don't branch out is because when I branch out, it means one thing: I have to go and test the new strategy. So if I use any additional indicators, if I use anything new and build that into my strategy, I need to go back and test that to find if it works, guys. The testing's the hard part. The testing's the time that takes a lot of time, and it's open to interpretation. So you need to nail it down, make sure that you've got a rule set, and then you follow that rule set step by step. So that's the difficulty with bringing in new indicators. That's the difficulty with bringing in new trading strategies, bringing in all sorts of different things, because I have to go and test them first, guys. So it takes time. Anyway, I digress. So in the short term, Cardano, guys, still needs to take out 82 cents. Overbought at the moment. When we come oversold, we need to make sure that we put in a higher high. Once we've put in a higher low, once we put in a higher low, the stochastic comes back down and resets. Bulls have got control. Then we can take out the 82 cents. So we'll watch that over the next few days together, guys. Let me know in the comments what you want me to cover next, and I'll see you in the next one.